Hello, everyone, and welcome to another exciting episode of the Pineapple Podcast. Remember, it's all about being sweet on the inside, tough on the outside, and wearing your crown of gratitude proudly. Today, we have Walter Phenix. Walter is just an absolutely amazing investor. Walter has actually gotten into the multifamily space, which is a space that I also love. So I'm really excited, looking forward to chatting with Walter about how he got into this multifamily space and some of the amazing properties he's been able to buy and just unpacking his story. Walter, welcome to the Pineapple Podcast.
Thank you so much, Mitch. Thank you.
Great. So I just want to jump into this segment because multifamily right now is a focus that a lot of people are interested in, but it also carries with it a lot of risk, a lot of understanding, and you need to learn a lot of things, right? So while it's all cool and sexy, I want to unpack in terms of how do you transition yourself into multifamily. But before we do that, I'd love to get your backstory, Walter. Tell us about your journey, how you became a real estate investor.
Sure. About 10 years ago or so, my wife and I had purchased our first condo for investment. It was pre-construction condo in the Vaughan area,
Nice.
just north of Toronto. So we had acquired that, kept on that for a few years. We still have it actually. And that
Beautiful.
was actually back in 2011 we purchased it, and in 2015 we acquired it. And like I said, we still have it. And then it took some time to get into our next opportunity, which we purchased a duplex in Newmarket, just a semi-detached bungalow that was illegal duplex, and we converted it to a legal duplex.
What you're saying is really non-conforming, right?
That's correct. That's correct. Non-conforming, yes. So we were able to turn it into a legal duplex, which,
Beautiful.
we heard some horror stories at the time of, things that can happen. We don't want to be liable. We don't want any issues. So we said,
Uh-huh.
let's just do it right the first time, and we don't have to deal with any issues, hopefully. And then that was in 2019, and then we didn't do anything much for a couple of years, and I knew that I wanted to continue on this real estate investing journey. I knew that I needed to get some more education. So, you find the groups that are around and they help you to get you to the next level. And my goal for 2022 was really just to get into like a sixplex or an eightplex. And we were looking for a while, didn't really see anything we really liked. And then we saw a 22 unit building, which the picture is there behind me. And it was a lot for my wife and I to take on. So, we kind of looked at it and walked away from it. And then we went back to it. And then we said, you know what? I brought in a friend of mine who is also a real estate investor.
Mhm.
And we looked at the building. The numbers made sense. We really loved the building. There was a lot of potential. And we ended up going forward, and going from 3 doors to 25 doors was a big step, but we feel that it was the right way to go.
And you did it, but I wanna step back a little bit because you said a few important things. You did a pre-construction condo. Now
Yes.
that's an area a lot of people, whether they're in a community or not, or whether they've educated in themselves in real estate, they can do that. And a lot of people have been doing that, and they've done really well with that strategy of buying pre-construction. And the fact that you bought it, 3 or 4 years out, I mean, that's phenomenal because in this particular market, things grow quite quickly. So I
Mhm.
love the fact that you're taking action. But then, I want to touch a little bit on that duplex that you decided to purchase because, as you said, it was non-conforming, but you bought it anyways.
Yeah.
I think part of it is seeing the possibilities of what you can really do with a property versus what it is. Because I love the fact that you said, okay, we didn't want any problems, we didn't want any headaches, so let's do it right the first time. So something like that, though, to make such a decision requires some level of understanding or network of somebody to talk to understand what you can do. And I'd love to sort of unpack what was the decision making process for you and your wife to buy that building and then say, okay, let's figure it out and do it right. And maybe it's going to the city, finding general contractors. Like, let us understand what that second step was for you, because I think that gave you the foundation for that amazing property that you have behind you now.
So, fortunately, I am an electrician by trade. I have been doing it for over 25 years. Regarding the building, I mainly work in high-rise condos downtown, so I have a very good understanding of the functionality of buildings with boiler systems and the electrical system, and so on and so on. So I feel very comfortable in this space.
Good.
It's kind of one kind of led into the other, and like I said, I don't feel overwhelmed walking into a building. I know what I'm looking at. I know what I'm looking for. I know if there's issues. I can really tell off the bat if there's anything really severe. Obviously you can't tell what's behind a drywall wall, but something on the face or wide open, you can. I have comfortable. I feel comfortable
Yeah.
assessing the situation. So, in that respect, I was able to also. You could go in and look and have an idea of what things may cost to fix. So we felt very comfortable with that. Yeah, that's kind of where I'm at with the buildings right now.
Nice. So the fact is you're bringing in your personal experience or your job experience into the decision making. I mean, that's phenomenal. And then because you're sort of in that environment where there's permits and codes and things have to be closed, you're quite familiar with that as well. So it was really something that you were comfortable with enough to sort of make that decision.
Yeah, absolutely. We walked into a building one time in London. Sorry, it was in. Yeah, it was in London. I apologize.
Yeah,
And
yeah.
they had a beautiful building.
Mhm.
The ceiling was a bit open, and the ceilings were open from one unit to the next, to the next, to the next. And there's no fire separations there. That's a huge liability. It's like, walk away, right? So
Right. Absolutely.
it's a good advantage I have, fortunately, to be able to, distinguish whether I think it's good or not. Yeah.
And that's huge. That is what the opportunity is, because in real estate investing, as I always tell you know people that I work with, it's you can find good deals, but great deals are made, and it's only made because you can see and have the vision of whether it is there or not, right?
I
And
agree.
that comes with education and experience. It's as simple
For
as
sure.
that. And of course, networking with different people. So after that, I'd love to understand, like you said, you went to this building, you walked away like 22 doors. That is not a simple project. That is somebody that typically has some level of experience or energy around multifamily.
Mhm.
But I love what you said. It's like, okay, you left you came back to it, but you came back to it with a friend. I think I want to sort of touch base on that. So, what were the deciding factors for you to bring somebody on as a JV or somebody to consult with on this deal, so that you gain that confidence to buy 22 doors in one building?
Yeah. So, a big reason why is to take on a building of this size, at least for us, as a first multifamily purchase, there's a lot to take in. There's a lot to do. You're dealing with so many people. You're dealing with a superintendent, which we have in the building. So and we also took on the property management ourselves. We wanted to learn. We wanted to know how to do it. We want to be able to do it. For future buildings, we probably won't be doing it, but we wanted to know how to do it and how to deal with it. So it was beneficial to bring in a JV partner for a couple of reasons. One was to lessen the risk, on myself and my wife. So now we're also, you know, we're spreading out the responsibilities
Right.
amongst myself, my wife, my partner, and his wife, which we're all partners. We're all splitting up the responsibilities, which is nice.
Yes.
And financially, we purchased this building, Mitch. We did this with our own money.
Yeah.
We didn't raise any money for this building. We wanted to do this first one with our own. My business partner Steve Ayub and I are on the same page where we didn't want to we didn't want to borrow money from somebody in an experimental phase and lose anybody's money. Like, we're both on the same page where I wouldn't be able to sleep if I knew that I owed you money and I couldn't pay you. So we said, let's go all in. Let's do it with our own. And, let's get this under our belt, and moving forward, okay, we feel comfortable, then we'll start raising capital and go with OPM.
Well, I wanna stay there for a couple of minutes because I think this is very interesting. And again, in understanding people's strategies, it's always easy to spend your own money because the risk assumption is on you, and also what your carrying potential is. So I love the fact that what you're saying is we're buying this building, we brought in somebody to spread the risk, but on top of that, now you're not jeopardizing anybody else's money. At this point in time, you're literally paying yourself to go to school on this building. You're going to learn property management. You're going to learn financing. You're going to see what it truly is to manage a building of this magnitude. Like 22 doors is quite a significant building in the Canadian or the Ontario market, right? And especially for somebody coming into the space brand new. So I love the fact that you are taking sort of like this approach, because the next deal and the deal after that, it all depends on how you can position yourself. Like, look, every time you buy a multifamily building, the lenders wants to understand your ability to manage. They're also trying to manage their risk, right? So the fact that you're going to school, self-educating, I think it's brilliant. The fact that you are assuming all of the risk. The guy who's willing to put his own money forward in any deal, that's the guy that builds the most credibility, right? So I absolutely love that. I think that's quite commendable. And even for our viewers, like, it's twofold. If you have the money and you can move ahead on the deal, then do that. And if you can bring in partnerships, that's even better. And if not, then there's a different strategy altogether. It means that you have to be more invested in your learning and your ability to manage deals. In which case, if you're kind of new on the side of it, find the right partners. Community is a strong way to do that. So love, love, love what you're sharing, my friend.
Thank
It's
you.
absolutely brilliant. And
Thank you.
tell us now, how have the experience been so far with property managing and taking all the calls and placing tenants? What was the sort of the aha moments with going through that sort of process?
It's been pretty good, actually. I can't really complain. Like I said, we have a superintendent that we somewhat inherited with the
Right.
building. It's a lady. Her name is Nicole. She's very good. We
Mhm.
took her on and we worked out a new deal with her. So she deals with the day-to-day issues,
Right.
which surprisingly, the building is 140 years old plus. But in the 1980s, it was rebuilt. Like, they basically gutted the entire interior and
Right.
built a new condo on the interior. Everything is concrete floors, concrete walls, or cinder block, like structurally very, very sound.
Right.
So she deals with the day-to-day stuff, which has been a huge asset to us. We do get the people that don't pay here or there, but that's minor issue. Whatever, we deal with it, and we haven't had anything major. Turning units, we've had a couple of units turned already, and it's been good. And it's a slow process, but it's happening. And
Good.
yeah, it's I can't complain. We've been fortunate. It's been rather smooth so far.
Good.
Yeah.
And then, to share with people as well on the financing side, what was the sort of the structure you did? Is this traditional bank financing, or did you go to the CMHC route? How did you guys decide on the structure of finance?
So originally we were going to go through a standard CMHC mortgage.
Right.
The seller was going to give us a 10% VTB.
Nice.
That actually complicated things. The 10% VTB, because
Okay.
the rents were so low. The
Okay.
bank was only offering us a 65% loan to value.
Mm,
So the numbers really didn't work at that point. We were going to walk away from it.
right.
We were lucky that we had a good realtor that is investor focused and has been doing this for a long time. And we ended up working out a deal with the seller. We did a 75% VTB
Okay.
for 3 years
Right.
at 4.5% interest,
Mhm.
interest payments only. So we just acquired it in February, so we really have about 2.5 years left. The goal is to turn as many units as possible, get it reappraised, and
Right.
then go through a standard CMHC mortgage, pay out this vendor his the 75% that we owe him, and hopefully we can walk out with no money in the deal and plus a few dollars in our pocket if
Well,
possible.
you've just turned this into quite an exciting project, because the VTB, for our viewers, that's basically a vendor take back. That's where the seller is now becoming the bank to finance the deal. Because as Walter rightly said, the banks were not loving the numbers because the rent is just too low, and seller recognized that if he did not jump in to save this transaction, he would be facing the same problem with the next buyer and the next buyer and the next buyer. So VTB is a great strategy for both the buyer and the seller, because one is you make the deal happen, he's going to still get 4 or 5% interest on his money, so he's not losing anything. And if Walter screws up on this deal and can't make the payments, the building is back in his portfolio. So it is truly a win-win, because Walter is assuming all the risk of turning this apartments, getting the tenants into a better place so that he could optimize the rents. And I just want to say, Walter, that the value of a VTB is incredible. We always talk about it, but just know that for our viewers, VTBs are not always readily available. You have to ask for it. Sometimes you have to educate the seller about it. So tell us about that experience. Did they come to the table with that, or was this a solution that you proposed to them?
So he was open originally to a 10% VTB, which
Right.
really wasn't much. And as I mentioned, it actually complicated the numbers with the bank and first mortgage and second mortgage.
Yeah.
So it actually complicated things. So we were, kind of left it off the table for a bit.
And yeah, like before you finish that, I just want to mention to be when you say complicated it, the challenge you have with the banks is they don't like anybody else having a lien against the building. So they want to be in first position and sometimes the only position on the building. So
That's correct.
yeah. So then you went back to the seller, and what were you guys at? Like, we're gonna walk away, or how did
Yeah,
you propose it?
we were going to walk away because at that point it just didn't make sense. The numbers didn't make sense. The mortgage at that time didn't make sense compared to the income that was coming in. Like it just we'd be losing every month. Like it wouldn't be cash flowing at all. But like we said, we had a creative real estate agent on our side, and he suggested why not up the VTB to 75%. And this way he can defer his taxes too for a few years, the seller, speaking of the seller, to
Absolutely.
defer his taxes.
That's
And
right.
he wasn't really open to it at first, but then he went back with his accountant and his lawyer, and he took a few days and he came back and he agreed to it. At the end of the day, he's clearing a check of almost $8,000 a month and he doesn't have to do anything.
That's
And
right.
if we default for any reason, he takes the building back anyways. So really for him, it's a win-win. Like he has nothing to lose.
That's right. That's why it's always good if you can become a bank. You see,
Absolutely.
they
Absolutely.
they have all the power. They don't do anything with the building. You got to do all the work.
That's right. Yeah.
love
Yeah.
love that. But the power of VTB, and to our viewers, the power of VTB is incredible. And sometimes it does take that. You got to educate people. You got to show them the benefits to themselves and the major benefits. Like Walter said, one of his big thing was the tax deferral, because that building, when he bought it to what it's worth today, it must have changed dramatically. His capital gains is going to be a lot. So imagine pushing that back a few years. He has access to that money. He can use that money, invest that money, and then probably make enough money to pay back the capital gains
That's right.
just because of that, right? So you're paying a significant interest, and I love the fact that you said it. You have to make payments to him now, and he is the bank. He is the mortgage holder. It means that if there's any faults or defaults, I should say, then he can actually go to his lawyers and say, okay, we're going to take over this property. So that's the power. And the risk is all on Walter or on yourself, because at the end of the day, you're the guy who's saying, yep, we can do this, right?
There's no option now. We have to do it.
But congratulations, man. That is a phenomenal way of getting into this size of property. And also, what I love is you've just demonstrated to me in every step that you took, you were outside of your comfort zone, but you're willing to take action. And that mindset is really powerful. Like, when you face that challenge, I have to come up with monthly interest payments, I have to manage tenants. I'm now, from dealing with a duplex, I'm dealing with 22 doors. Like, how do I even get there? But you're embracing it, and you're trying to find solutions by bringing other people so that you can build on their experience. Like, that to me is the right mindset for success. And multifamily, great space to be, because as you are rightly seeing, the opportunity, if you can turn the building and get higher rents, values grow based on rent roll or rent increases, right? Which is not sort of like on the residential market, where it's an emotional buyer, it's driven by market dynamics and not necessarily by yourself. In this case, you control where the building value can grow, because you know what you can do with the apartments in order to get them to a higher level to get higher rents.
Yes. We're
So
fortunate that we have a very good team and a very good community around us. So it works.
big time. And I want to emphasize, even for myself, like, I spent a lot of money educating myself, and now today I educate people with multifamily, business planning, just coaching in real estate as a whole. And I'd love to get a sense of your investment in yourself, like learning, because again, you can't just magically show up and things happen. You really have to invest in yourself. So if you'd share with us what that looked like in your journey in real estate.
Um, Regarding the groups, sorry.
The training that you've invested with you and your wife, like, what have you guys done to bring your knowledge up to speed?
Yeah, we've joined a couple of different real estate investing groups, and you know, they have a lot of information modules and courses, and you go to conferences, which I've never done before. I'm an electrician. I have no reason
Yeah,
to go to a conference, but you
100%.
go to these conferences and there is a wealth of knowledge there. There is the community, all these people that have been doing it, like yourself, Mitch. You're talking to people like yourself and taking these tidbits from everybody and learning as much as possible. And I've learned, I go there and I be quiet and I'm just there to listen and take as much information in as possible. Take my notes. I have my books. I spend a lot of time on Zoom calls, just meeting people, learning about their experiences, what they're into, what they're doing. I ask them, I have a list of questions that I ask the same thing to almost everybody. And one of them is like, who else should I speak to? What books are you reading? So there's been so much help and knowledge and information from communities and like I said, these conferences have been great. And just meetups, go to a bar and where they're, holding a meetup and you talk to these people. It's just wonderful.
100%. I mean, this is the important thing, guys. It's like, okay, multifamily can literally add millions of dollars to your net worth. So investing in training programs, investing your time, as you say, I'm an electrician. What am I doing in a conference, right?
Mhm.
But you know that you're an investor, and that in order to get there, you got to show up in these places. The investment in community is also huge. Like, for example, the community we're in, the people that we've been able to network in are growing together. And that's the key. It's like, don't be afraid to get involved. Don't be afraid to invest in yourself. It pays back tenfold, right? Like, Grant Cardone is always about 10x, 10x, 10x. Yeah, well, this might be 20x and 30x, right? So the power in association and the power in education, I think, is critical for coming into a space where you kind of have an idea, but you need to get to the finer details. And Walter, thank you for sharing that, because to me, that's a big opportunity that people sometimes don't understand. Like some people say we're spending money, and then when they realize we've just doubled our investments or tripled our investments, now they realize I've just invested money. Completely different mindset. And it puts them in such a confidence or powerhouse that they are just willing to take on more and do more, which is exactly your journey. Condo, duplex, building, like, and you're just brushing up. Like now you're just refining your skills so that you can plan for your next steps. And we'd love to know, Walter, like what's in the future? What are you guys thinking? You and your wife now, what are you planning for the future, or are you at that stage right now?
Yeah, I've had a goal for a little while since we've acquired this building, seeing that how it is possible and seeing how other people are doing it, and these other people seem to be, just like yourself and myself. I don't think anybody is, not to be rude, but I don't think anybody's super special. It's possible. Anybody can do it. Like I said, I'm an electrician, and I got to this point, and if I can do it, anybody can really do it. Our goal really, and it may sound like a lot, but a goal is a goal. Our goal is to have 50 doors a year for the next 5 years. We want to try and hit 250 doors in 5 years, like I mentioned, and that's the goal. Now, whether we get to it or not, we'll see. But that's the goal. That's what we're striving for. We're putting our head down. We're talking with everybody that we can, all the realtors that we can, looking up all these buildings that we can. Like this building here, I found it on Google. I Googled multifamily buildings for sale in Ontario, and 20 or 30 came up. I emailed every single one of the realtors, and some responded, some didn't, and this gentleman did, and it ended up working out. So it's just about being adamant and working hard and keeping your head down and keep going. So it'll happen. It'll happen.
I absolutely love that, because the reality is, yes, the first thing is set a goal. And a goal is just a goal. If you are 100% of the goal, that is perfect. You can also be 150% of the goal, or you can be 50% of the goal. But either way, all the ways you are winning, because you know you have an objective to go towards. And I commend you on that. That is one of the foundations, and even in our business planning course, it's like, what is the goal? We got to set that. Then we measure it. Are we achieving it? Are we over delivering, or are we under delivering? Right?
Yeah.
Very simple formula. Clearly, it works, because you're a perfect example of demonstrating what that looks like. And I love the fact that that you said that anybody can do this, and it's absolutely true. Like the vision we have here, what we work in, is we look for everyday people that's doing extraordinary things, right? I think that sums it up. And all you got to do is just take action, show up, get educated, get into communities that can really help you grow and learn, because the opportunities are there. You just have to be willing to take the action. Like you've done the action, like going into Google and searching multifamily, that's going to be a hell of a list. And you embraced it, right? You worked it, you spent the time, you went through a process, and look at what happened today. Today, proud owner, working through an amazing opportunity. And by the way, we talk about castles. I think that this property is definitely your castle, even though it's a multifamily.
Yes.
I love it. The building looks absolutely gorgeous. Absolutely gorgeous.
Thank you. It was actually built as an opera house, so we call it. It's
Oh,
called the Opera House Apartments.
beautiful. That is
Yeah.
amazing. Well, congratulations, my friend.
Thank
Well
you.
done.
Thank you.
So, for our viewers as well, like a lot of people in this space, they're learning about multifamily, they do exploring different strategies and so on. What would be sort of like your last parting advice to members as we kind of come off, closing off the segment?
So, just like any investment, you cannot make it personal. The numbers are the numbers. Although this was a beautiful building and we really liked it, if the numbers didn't make sense, we walked away. So you have to be willing to walk away and not get emotionally attached. It has to make sense. There has to be an exit strategy. You have to have a plan. This is no joke. You're not getting into a onesie over here where, a small condo or something, right? So you have a lot of responsibility here, and especially if you have investors, it's all about the numbers. So it takes time. It will take time sometimes to find the first building or second building or whatever. We're having a difficulty right now trying to find our next property, but just, the numbers have to make sense for it to come together.
I absolutely love that. I think that is invaluable advice. Thank you for that. Because it's not getting emotionally connected, it's getting behind the numbers and understanding what the deal is. And thank you for sharing the fact that it's not easy to find these deals. A lot of resources across the industry spent trying to find deals.
Yeah.
So again, Walter, thank you so much for being our guest, sharing your story. We look forward to seeing you come back here again and show us what the next opportunity is going to look like.
Thank you, Mitch. We appreciate it. Thank you so much for taking the time.
Oh, you're most welcome. And to our viewers, remember to hit the like and subscribe and notify button because we want to continue to grow the base here. So please feel free to share this link with any of your friends, family, and people that you associate with. And remember, it's always about being tough on the outside, sweet on the inside, and wearing your crown of gratitude proudly. Take care, everybody. Bye.